Hey everyone, Daniel Snyder here from Seeking Alpha. Today we are going to be diving into the world of biotech, which I'm super excited about, especially within these crazy markets. I mean, obviously, as we're hosting this right now, April 16th, we saw Powell come out. There's been quite a move in the market right now. And well, that just seems to be the nature of things nowadays. So obviously, when we focus on growth, we talk about biotech. We have Jonathan Faison from ROTY Biotech here today to talk to us. But first, let me go ahead and get a quick legal disclaimer out of the way. Past performance is no guarantee of future results. Any views or opinions expressed in the webinar do not reflect those of Seeking Alpha as a whole. Seeking Alpha does not take account of your objectives or your financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Information provided by the investing group does not constitute investing advice. Investing group leaders are third-party authors that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Any content and tools on the platform are offered for information purposes only. And with that out of the way, I would love to introduce to you all Jonathan. If you don't know who he is, well, now you do. He is the man that I'm like, if I have a question about biotech, if I have something about FDA, if I have a question about what drug might be cornering a market or what's the next potential, he is the one to come to. So I'm super excited that we were able to grab some time from him today. So Jonathan, how you doing?
Hey, good. Good to be here. Thank you again.
All right. So we've got a good sizable crowd here hanging out with us today. And I'm sure there's going to be questions for you about this space because it's some sort of an unknown. Some people don't even like to touch biotech, right? When it comes
For
to
good
investment.
reason. I completely understand it.
So before we dive deeper into talking about the stocks that you want to tell people about today and talking about the lay of the land, why don't you go ahead and just give people a kind of a quick background of how you got into all of this?
Okay, so I think most who follow know the story, but started investing in 2008. Had no idea what I was doing. This was right before the financial crisis. Probably lost half the life savings into it. Made a bunch of poor calls along the way. Every mistake you can imagine. Started writing on Seeking Alpha, basically to share my ideas, to keep improving. One thing I loved is that the comment section was brutal, especially when it comes to biotech. Doctors and others who obviously have a lot more background knowledge than I do in the sector were able to call me out where I got it wrong. That's how you get better as an investor. Never thought it would turn into a biotech service of any kind. I was just sharing what I was doing with my portfolio, what's worked along the years. Very lucky to have survived my mistakes and try to share what I've learned so other people don't have to go through the same roller coaster ride that I did. Though, as you said with Powell lately, there's kind of no avoiding that.
I mean, it's a little bit of everything, right? You get the overall market dynamics, but what I like is that you dive into these actual companies. And we had a lot of conversations the other week as we were
Mhm.
planning for this about what we wanted to talk about. And something you mentioned to me at that moment in time that I hope you can address here is you said it's kind of not even a fundamental market right now. Could you elaborate more into that?
Sure. So on the slides, I don't know if we bring them up, but
Yeah,
it
let me go ahead.
doesn't. Sure. But anyway, they have the XBI. You can see it's fallen from 105 down to 70 over even the last half year. The BBC, which is the clinical biotech ETF, um, that's also at lows. It's not even when we thought it was double bottoming at the same levels as the 2023 lows, it completely plummeted below that as well. And we're seeing that spread to throughout the sector, the baby being thrown out with the bathwater. If we go down to the third slide, let me pull this up. Uh, or I guess you're controlling it. There we go. Yeah, you can see the sector. The BBC is down 46% over the last 3 years, and it's no wonder people are steering clear of the sector. If we move to the next one. So the perfect storm continues. You've had funds that are forced to sell at exactly the moment they don't want to. Investor redemptions forced. You have liquidations of companies trading below cash. Everyone's asking, is the sector broken or is it just a bear market? Personally, to me, that sounds like capitulation. You could say almost 50%, almost half of companies under 1 billion are trading under negative enterprise value, trading below their cash. There's this issue of zombie biotech companies, which also turns people off to the sector. Completely get it. These companies where their lead drug fails, their next drugs in the pipeline, let's say, are preclinical or they have nothing and they'll in-license something preclinical. And instead of being good stewards of capital, and the best option would be to return that money to shareholders and close down. Sutro Biopharma is a good example, STRO, where we talked about it in the last webinar. I wrote an article on it, how I liked the technology, but I couldn't get behind the company because their lead construct was going after folate receptor alpha, which is a crowded target in the ADC world. They tried to claim management that there was white space in the low to medium expressors of the target. But actually, in NCCN guidelines, the approved drug from Immunogen, which was a holding of ours that got bought out by AbbVie, I believe, they actually can address those populations with the Avastin combination. And so Sutro, long story short, after all this time of claiming that they were, going to continue with this construct, they let the news loose that they are deprioritizing, which means they're going to try to partner. Probably nobody wants it, that asset, and they're going to move forward some preclinical drug candidates instead. And so the market, you're not looking at any meaningful catalyst then for the company potentially until those, you have to get them through IND enabling studies, then you have to get them in phase one, slow dose escalation up. And so long story short, there's a lot of people who would argue that the company is better off liquidating and returning the cash to shareholders. Fortunately, in the news this morning, we saw a couple of companies where funds are pushing to do that. And then, of course, the uncertainty from the Trump layoffs at the FDA. A lot of companies are asking whether the timelines are still intact for regulatory, if they've agreed on endpoints for certain studies, especially in the rare disease area, where if we're waiting for longer term outcomes, these studies could take forever. So they're allowing for biomarker endpoints. Companies are wondering if that's still on the table, especially with Marks is gone as well. So definitely the uncertainty there. As we were talking about Powell's remarks today, unfortunately, there's this connotation that biotech, when the overall market is up, we're up more, but when it's down, we're down even more as well. And so it's definitely the highest volatility, highest risk sector.
Yeah, I was going to mention on top of that. I mean, I was just pulling up XBI here. Year to date, down
Mhm.
17% for the sector from the XBI ETF. So some people look at this market environment. We've been talking about this lately in webinars that sure the market's crazy, but there's
Mhm.
actually these green shoots of opportunities. And even
Sure.
Steve was talking about the quant system the other day. Like one of the first Mag 7 stocks has actually populated as a strong buy, and that was Amazon. If you wanted to go back and watch it, but we're starting to see the prices of stocks come down. So now we're all turned to the earnings and waiting for the earnings calls to come down the line and see what happens with management and forward guidance and everything else that everybody's worried about right now. How is that impacting biotech in general? I mean,
Sure.
they're capex, they spend, right? They spend, they go take the money for the loans, they're trying to do all these medical drugs. There's a lot of uncertainty. How are we supposed to invest here in this sector right now?
Sure. If we can move to the next slide, and a shout out, I see Gal's research in the comments as well. For those who perhaps don't follow him, he does a lot of public articles on Seeking Alpha. I'm a big fan. I found him to be rather balanced. Balanced takes are hard to come by in biotech. As far as you were saying, definitely in my case in the portfolio, we have about 70% of the portfolio focused on commercial stage biotechs. The reason is those have been holding up well. Those have been kind of doing the heavy lifting in my portfolio the past couple of years. That's why we've been doing all right. And 30% is the maximum I'm allowed to invest in clinical stage companies. And that's simply because those have been, as you said, the area that's been hit the hardest. The flip side is crisis is their opportunity. It is a stock picker's market. The National Security Commission of Emerging Biotechnology was a bipartisan committee, came out with strongly worded support for the sector. The guidelines they gave were pretty interesting about prioritizing the US biotech, how we don't want to fall behind the Chinese sector or Chinese competition. We need to encourage innovation, manufacturing, get support, build the workforce. And so a lot of the guidelines they are suggesting are actually bullish for the sector long term. So one of the things I say is, right now biotech is, no offense, the redheaded stepchild of the stock market. And what happens if the opposite comes true in the coming years, where they actually prioritize the sector? And that would be, we go from the place everybody's steering clear from to the place where everybody wants to invest in. As far as how to navigate the current market, the bright point for me I've been seeing lately is growth investors, people like you said, who normally say, I don't want to even touch biotech, cash burning companies, but they are finding these growth oriented commercial stage biotech companies that are all about revenue growth year over year. They're launching new drugs in exciting spaces. And so for me personally, the sweet spot has been finding those companies when they're trading around enterprise value of one times conservative peak sales, or finding companies that are already have phase 3 data in hand, or they're already in regulatory submission, and we try to invest in them before they become growth stocks.
So what about like how are tariffs going to be affecting these companies? Because I know some of them deal abroad, whether it's clinical trials or even trying to, I don't know, get simple things like needles and syringes, right? For example, like all the tariffs that are coming through to medical supplies. How are these companies going to be navigating this new environment?
So what's fun is every month or so we have a coffee at the close, which is all the members of ROTY Biotech Community, veterans and newbies. We're all sharing our thoughts on the sector. And tariffs, the macro scene is definitely not my forte. So it was nice to hear from others who are more well versed on it. Particularly Tom, TDM Invest. He is a member who actually works in the wine industry where the margins are pretty poor. He would be the first to admit. One thing he likes about biotech is it's a high margin industry, for these drugs once you actually get them approved and marketed. And so, we definitely underestimated the impact of these tariffs, at least to sentiment for the sector. But on the whole, a lot of these companies, especially, those with US based manufacturing, are saying, coming out with statements that they would not be affected to a large degree by these tariffs. But again, it's biotech is driven by sentiment as well, and we've seen what that's done to sentiment so far. On the flip side, it's been nice that Trump, the executive order today that he came out with had they were targeting the PBMs, the middlemen. That's nice as opposed to going after purely just after the biotech companies when it comes to drug pricing. The Inflation Reduction Act, or IRA, penalizes small molecule drug developers 7 years before price negotiations can take place versus 11 years for biologics. So it looks like they're going to try to tackle that as well. So there's definitely some, as you said, green shoots, but one thing is talk and another thing is action, and we have to wait and see.
There's an interesting question I want to go ahead and slip in here too, because you had mentioned with the FDA, there's the whole shakeup at the FDA. And Peter's here joining us today. He says, is there any evidence of corruption, kind of payouts to get the FDA approvals in this space during this time? Do you have any thoughts on that?
Um, I will use the example of a genus biotech AGEN, AGEN, who we had it as a portfolio holding way back in the day when they were trying to get their first approval for Bali and Zali, their CTLA4 and their PD1 in cervical cancer. And they were ahead of the competition for that second line indication. I believe was it Merck who was behind them with Keytruda, and the FDA leapfrogged Merck, got them approved, which means that that pathway, the accelerated approval, was now blocked for Agenus. So I'm not saying there's corruption, but it does seem like there are instances where big pharma is incentivized or favored over small biotech companies. And you remember, biotech is a minefield to begin with. So many things that can go wrong, whether from clinical trial holds, a serious adverse event that otherwise tanks a safe drug. Um, all these different variables. And so if you're an investor and you feel like you've gotten your thesis right and something like this comes out of left field, I can see how it definitely discourages people.
Yeah, I mean, there's also constant shakeup, right? I think what we've all seen from this administration is they're moving extremely fast. People don't feel like they can catch up. They don't feel like they can anticipate what's going to happen next. So how are these companies going to be able to even plan for the future of how they're going to operate during all these trials and tribulations ahead for them? I can't help but think of maybe you have some opportunities and some ideas of solid companies. But before we dive into those, I wanted to ask you about AI and how
Sure.
AI is affecting the sector right now. So before I ask any further
Mhm.
questions, just would you mind giving your overview of how AI is either benefiting or hurting biotech?
Sure. Before I get there, your last question, just so I don't let it go by, uh, reminds me of a basketball movie. I mentioned this analogy before, this metaphor where the coach holds the basketball and says, this ball represents everything there is to know about the game. And then with the Sharpie, he puts 1 point on it and says, this is what you know about it. And that's how I feel about biotech. There's so much I don't know. And so when it comes to these companies and you're asking, how are they going to survive? That's a great question. There's a lot of, I like to call them science projects out there where it seems like they're throwing everything at the wall with their technology, seeing what works. And we try to steer clear of those companies. So there's a large portion of the biotech universe that perhaps is uninvestable. And as Galza said in the comments, it's a stock picker's market. So for me, I try to focus just on the areas where there are higher probability setups, whether that's commercial stage or these are companies that already have a clear path to market. So they're not a science project, they actually have a legitimate commercial opportunity. They're addressing a high unmet need. They're either going after an area where there is no competition or where the data they have in hand is markedly better than the competition. So you try to handicap it as much as possible in your favor, whatever your niche is, find whatever works for you. The TDM invests in our chat. He likes to invest in what he calls the black sheep of biotech, which are basically unloved commercial companies, companies that everybody loves to hate. And maybe before they were high flyers, but at a certain point when they come down so low that everybody hates them, he's not looking for a home run. He's just looking for, sentiment to improve a little bit or for this company to execute. It doesn't have to be a home run out of the park. So find whatever works for you and stick with it. As far as AI goes, that's a great question. I think we're in the really early innings of it. I won't claim to be an expert on that space, but we did see how AI was used to accelerate the vaccine development for the COVID and so forth. And so we're already seeing companies that are focused on that for drug development. There was recent news that they're trying to eventually phase out animal testing from biotech, and they would use AI modules instead. Again, that's going to take quite some time. We don't have any timeline for that, but that would be really interesting.
So for somebody like me, I don't know biotech that well, but
Mhm.
when you're saying that they're using AI within the biotech space, is it more of kind of creating a fake clinical run of a test just digitally across many tests? Like, what are they doing specifically with AI to help streamline and become more efficient or develop these new drugs?
Well, I was fortunate when I was in Panama. For some reason, a lot of the AI entrepreneurs are there. I ran into some heads of companies there, and they talked not only about biotech, but every sector, how they plan to revolutionize it. It's almost like a religion. And when it comes to biotech, I think they're in the early innings still of figuring it out. But the idea, and I wish I had a graph in front of me, I don't, of the failure rate. There's a very high failure rate from preclinical to phase 1, from phase 1 to phase 2, et cetera. And so the idea would be to leverage AI to not only accelerate the pace of drug development, but also to reduce, to increase the success rate as much as possible, reduce that failure rate. So that would be really interesting to see, but again, not my forte.
Gotcha. There's an interesting question here about utilizing synthetic DNA and what it means for drug discovery. Do you have any thoughts on that?
Quite a few of the questions I'm seeing, I'll put it this way, I see questions about companies that are not in our portfolio. And it's fun in our chat when you have 500 people. The nice thing is, hope out of any name, there's going to be a few people who own it and who can discuss it. So for me personally, I don't have that kind of attention span to be able to follow lots of companies. In the portfolio, we probably own anywhere from 10, maximum 20, usually around 15 is the sweet spot companies. And so I'll be the first to say when either there's a ticker I'm not familiar with, or I'm vaguely familiar with it, but not knowledgeable enough to provide my opinion on it. So the same goes with that topic.
Yeah, man. Appreciate the honesty. I know we all do. But speaking of your portfolio, the last time we talked, you talked about you actually kind of shifted the way you approach your portfolio more recently. Would you mind just
Mhm.
sharing that with the changes you made?
Oh, sure. So that was 2023 again, where we made the transition to focusing on commercial stage biotech. Over time, I limited the clinical stage portion of the portfolio to only 30% as a maximum. And the reason is I just found out not only am I avoiding the early stage, but for the later stage clinical, it just hasn't had the same hit rate, the same success in this environment as commercial. And so, put it this way, 2023 was the first year we made that transition, and the portfolio returned 117%. Last year, we were up around 45% into Q4. And then some binary catalysts, completely my own fault. I was holding size in clinical stage companies that were too risky. Lost quite a few of those gains, ended up down up just 14% for the year. And that was a reminder to me, for commercial stage positions, the maximum I'm allowed to own, no matter how much I love the company, is 10% of the portfolio. So if the drug launch goes well, we do well, great. And for clinical stage biotech, the maximum I'm allowed to own is 5% of the portfolio. So if it does really well, you get that elusive 5 or 10 bagger. That would be amazing. And if it doesn't, you're going to live and survive to fight another day. I think so much of the time, especially I did when I started out, I forgot or I didn't realize it's all about risk management and developing not only a resilient portfolio, but resilient personal finances. So many times, investors, we focus on the balance sheets of these companies, but not our own personal balance sheet. The idea, obviously, we're not Buffett or anybody, but we want to be doing well or all right, staying in the game when the market's doing what it's doing now, when it's a really poor period and able to each month put money to work in high quality names.
Yeah, duly noted. So, shifting gears here, I want to ask you maybe one or two more questions before we dive into some stocks that you wanted to talk about here today that have what you say opportunity, right? Um,
Sure.
First up, what happened to the M&A space? What's going on with M&A within biotech right now?
That's a great question. It seems to have evaporated. It was a couple years ago. We had some good ones. Orchard Immunogen. At the beginning of this year, there was ITCI. I did not own it, and from there, it's been pretty quiet. This one is not in the slides. It wasn't a company I was going to mention to the those watching, but SpringWorks Therapeutics (SWTX). SpringWorks, it was the top weighted position in the portfolio. At its highs, it was almost 20% of our portfolio. That news came out that they call it fake Merck. Merck from Germany was looking in buyout talks to, yeah, so it spiked there to 60. We sold half the position, and then it fell back to 40, then, mid 30s. And the talks supposedly are ongoing because these European companies have to disclose when these things are going on. But lately, in my personal portfolio, what I do is I share when I'm making dollar cost average purchases with new money. And that's been the company that I've been focusing on just because the buyout premium has leaked out of the stock, the valuation. It's valued, what was it, around 2.3 billion enterprise value last time I checked, give or take. That's around 1 times peak sales for Ogsiveo and Desmoid, plus Gomekli in NF1-PN, which was approved not only for pediatric but also adult. So just another example of our launch stories. I'm not trying to reinvent the wheel here. I added again to it, so it's at 10% of the portfolio. And maybe tomorrow we get the news that the buyout fell through and it falls further. But again, we're looking at the launch and sales growth 2025, 26, 27. Um, so for me personally, it's about holding these companies patiently. When they report those results every 3 months, quarterly results, you're able to either A, confirm thesis or it's strengthening, so you can hold patiently. And B, if it's shows I'm wrong, I'll be the first person to open my mouth, insert my foot, sell it, and move on. So that's kind of similar for all the portfolio companies across the portfolio.
Jonathan, is this right here? Year over year revenue growth of 3,417%.
I don't have that metric offhand, but obviously the Ogsiveo launch is getting just off the ground, so those percents can be very misleading because they're coming off of a small base. So I would focus more on the actual revenue number versus the percentage.
Solid point. I was just always like to look at that. Everybody likes large numbers. Let's be honest, right? All right. Another question for you. Everybody's looking at the space. RFK Jr.
Mhm.
Is he going to shake it up too much? What are your thoughts on him? Is it kind of just like a show off to the side, or is this actually going to affect some of the companies that you might have in your portfolio?
Sure, with a caveat that there's no crystal ball here.
No, of course.
It seems like he's going more after the vaccine space, which currently in the portfolio, we don't own any vaccine makers. It seems like he's focused more on food supply, et cetera. But there's two views too. There's people who are concerned and definitely understandably, there's been a lot of top talent that's left the FDA, and that's one reason the sector has suffered and led to this regulatory uncertainty, both on timelines. Will they still be intact? Will prior agreements still be intact? You look at Nuvation Bio, for example, NUVB, we don't own it now, but they have a ROS1 drug with the June PDUFA date coming up. And they had a high percent of Chinese Asian patients in the study. They did have breakthrough therapy designation from the FDA. They already opened expanded access program, which EAP, which you cannot do without the FDA's consent. But on the other hand, we saw with Ascendis Pharma that we'll talk about later, ASND, they had a expanded access program in place, and they still got a complete response letter last year. So the uncertainty there is current. There are some, I think there was fund manager from RTW Investments, Rod Wong, who came out thinking that, and obviously he's talking his book with that caveat, but basically saying that the flip side of this could be if things are streamlined, if approvals are coming faster, if the regulatory pathways are expedited, in a few years we could be seeing the benefits of that. So both scenarios are possible, but we're definitely, and there's no way you can get around this in a period of more uncertainty until this clears up.
All right, solid point, solid point. Now I want to go ahead and dive in. We've been talking here for 25 minutes already, right? Let's start
Sure.
talking about stocks. Let's talk about this stock that you just mentioned one, but I think you brought two today. Is that right? Uh,
Yes.
okay, let me go ahead and share the screen here. Maybe you can give us the setup for what we're looking at.
Sure. We'll do those, and then I see a few in the comments. I'll say something about if I have anything to offer. Ascendis Pharma, so it's risen since then, but again, this is either number one or number two holding in our portfolio. It's been a multi-year time frame name for us, so we're solidly in the green now. When it fell to, you see here the 200-day moving average around 130s, was saying that's a good place for people who have not scooped it up to scoop it up. Dips here even would be fine because we're looking at accelerating sales growth for Yorvipath in the PTH population throughout the next couple of years. They have the coach readout, which is the CNP HGH combination readout this quarter as well. So another example of a quality launch name where you just hold patiently for a multi-year time frame. Long tail revenue, they also had two competitors that there was Septerna with an oral one THR agonist, and that failed. And then AstraZeneca's eneboparatide came out with a phase 3 win, but they didn't provide any details, so it probably isn't competitive. So it's nice when they have a long tail revenue, long IP runway to maximize peak sales. And the other one you can move to is SPRY, ARS Pharma. And so this was slides from last week. Had been telling people those dips down to $12 were able to accumulate. I would not chase it into Q1 though, just because there's always the chance of a sell the news reaction. A fun friend of mine was shared a short thesis with me where they are concerned about direct to a consumer marketing campaign could burn more cash than expected, or also if the this new administration, like you were talking about with RFK, if they ban direct to consumer advertising, those are things that could affect it. They should have 80% excess of 80% commercial coverage by Q3. So that's kind of when the tailwinds kick in for Neffy in the back half of the year. This is intranasal epinephrine spray. So their idea is all of these people who are needle phobic would come out of the woodwork. Also, the convenience of this presentation more would be equate to more units purchased per user. Imagine the grandparents buying it as well as the parents and anybody else who has contact with these kids. Big caveat is that the company overstates the market. I think they're pretty rosy with their estimates. Here you can see 3 billion of peak net sales potential, 7 billion expansion. I think originally we started out for our thesis at 600 million of peak sales. For me personally, I like to start extra conservative and I only move it up if launch metrics and demand in the commentary confirm. So maybe call it a billion of peak sales if it works out. So I would be careful with the inflated numbers. They're also going after the CSU indication, chronic urticaria, and that has a phase 2B data due early next year, I believe.
So how do you calculate your conservative numbers, right? So they show down here at the bottom of the screen
Mhm.
3 billion and you're saying 600 million. Now that's a huge spread. So how do you get to your 600 million?
That's a great question. First, in chat, one thing that's nice is if we have anybody who actually works in the space, it's nice to bounce ideas off of experts. I try to listen to other KOL calls as well. And when in doubt, I take consensus numbers and I'll chop them down significantly just for the sake of being conservative. We want situations where uh, it's not always the case, obviously, but heads win big and tails, your loss is limited. So if I'm entering a stock where enterprise value is around one times peak sales potential, such as when we entered SPRY at around $11, I believe, that puts us in a situation where if it works out, hopefully it works out well. And if I'm wrong, and let's say Neffy does poorly, or the other, EpiPen and the other players drop their prices significantly, it becomes a price war. Hopefully, that downside isn't has some cushion to it.
Okay, duly noted. Okay, so you said two names here, AS and D. I just wanted
Mhm.
to take a quick second, and actually, we're gonna go to Seeking Alpha and just pull up the symbol pages as well. I want to highlight for people. Sorry.
Uh,
Uh,
sure. And while you're doing that, again for ARS Pharma, I wouldn't be chasing, just kind of putting that out there for me. What I tend to do if a stock gets away from me, I'll set price alerts on it. I use FinViz, but you can use any type of service. But what I'll do is set price alerts at the level at which I would be willing to revisit a company. And if it comes down to my level, great, I can buy it. And if it doesn't, there will always be others. So that helps me to combat FOMO. So for ARS Pharma, if it comes down to a level that's viable for you, let's say 12, for example, or it sells off after Q1, then you could accumulate it. And if it doesn't, look at other actionable names such as Springworks Therapeutics, SWTX, that we talked about earlier as well.
Jonathan, I want to take a second to ask you, when you're going to look for a new biotech name to add to your portfolio, how do you kind of take that approach?
Great question. I have a premium news feed, so I've been grandfathered in. Which one is it? The fly on the wall. So I'll check in the afternoon and in the morning, just if there's any news company-wise that grabs my attention for looking into it deeper. And then I'll use a typical stock screener. You can find many of them for free. If it's a down day for the sector, it's fun to look at what's up, what's bucking the trend and why. If it's a very good day for the sector or even flat, let's say there's other companies that are not doing well, look at the setbacks. Maybe they had something news related. Is it a setback they can come back from, something temporary, or is it really a thesis killer? So looking at price action for sure. I was fortunate enough when I started trading, I learned about price action from day and swing traders, and I learned that I was not good at either of those. But one thing that was nice is being able to read price action. You can tell when there's institutional buying and selling, and then from there you dig into the company's uh, prior presentations, conference calls, and see if it's worth your time for deeper due diligence. I think a lot of these companies, within 15 minutes of digging into it, you can decide if it really merits your time to dig deeper or move on to something that better meets your selection criteria. The more you know what works for you, the more you can. The more you can have that process of elimination, eliminating everything that doesn't line up with what you're looking for.
Yeah, solid points. I don't know if Jonathan, maybe you use this already, but I've started using this a lot more. We have the AI earnings
Mhm.
summaries that are put up here. So I'm looking at Ascendis Pharma here. Quarter over quarter comparison. This is just a section that I like to look at because, like, for example, I went and looked at deltas the other day, and it was like, well, management made a huge shift in talking about how great this year was going to be, and now, of course, they're kind of freaking out about main cabin. But here, analyst concerns remain focused on the reimbursement, patient adoption, consistent with prior quarter, financial sustainability improved. Are these kind of things that you are factoring in when you're going into the earnings calls, or are you kind of preset on your own initiatives of how you approach these companies?
I've noticed that lately. That's nice to have something to, see the cliff notes quickly for sure. So definitely helpful in using it more. I see a user question. Let me pull this up. Um, Let me pull this up. And they were saying about the barriers to considering generics, the fact that generics are cheaply priced for the Neffy. And they're right that the auto injector is around 40 to 45, I think, with the average copay dollars. With Neffy, they've been able to buy that down for patients down to $25, I believe. wave. So that's with the copay. So again, I don't have all those notes in front of me, but they are actively addressing those. Otherwise, it's still a competitive cash pay price of around 199. They're doing the NEFI in schools program as well. So it's interesting to have those on. They're trying to build out that moat early on. I see a question from JS about Aquestive Pharmaceuticals, AQST. I actually like that company as well. I do not own it because it's too far away from commercialization for me. I think they're in the middle of their regulatory filing, but it is on my due diligence list simply as a sympathy play. What happens if ARS Pharma has better than expected launch, which points to higher than expected, demand uptake, peak sales potential, and then you can have something like AQST, which can be what I call a sympathy play. And again, just because its competitors doing well, there's positive read through to Aquestive that there's an opportunity for their sublingual instead of intranasal. So there's room for both to win. In the case of Aquestive, I think they're working on something else. It was a dermal gel for alopecia areata. And what would be interesting there is that's a pipeline and a molecule. So Aquestive, their management seems like they want to partner out the their sublingual film for epinephrine. So it looks like they want to partner that out versus doing the heavy lifting themselves. So it seems like they're focusing on the pipeline, but I would love to see them get a deal, where they get a significant upfront. They get to keep a decent chunk of the economics, maybe even, 50-50 in the US. We'll see. So there could be best of both worlds there. Again, that's just on the due diligence list, just because it's clinical stage.
So we're gonna dive into a little bit more of the chat here in a second, but I wanted to circle back. I just had this thought because you had mentioned it kind of in passing.
Mhm.
Do you think that they're gonna ban the pharmaceutical commercials? And if so, how is that going to affect this space?
That's a great question. There are companies that would be more um, impacted by this, obviously. For example, ARS Pharma with Neffy, if they were planning to have these commercials in streaming or at other important events, that would definitely impact the launch uptake. But on the other hand, there's other companies, drugs that sell themselves where there's either nothing approved or the new drug that's being launched is significantly better than what's available. Look at, for example, Ascendis Pharma with Yorvipath. I don't think DTC is going to affect them much. I see somebody asking a question on, I just want to mention this, Fat Home Pharmaceuticals, PHAT. What's interesting there is they have some IP issues where they're looking to have runway to only 2030, and if there's a positive court ruling 2032. It was a drug. They have a drug that I was actually really interested in the launch for Jared, and we wanted to, but the problem is they don't have that long IP runway. One of the selection criteria for our portfolio is long IP, specifically composition of matter patents. So usually to late 2030s, 2040. I don't pretend to be expert on that front. So for me, one way I kind of handicap that in my favor is I prefer companies that have those composition of matter patents to at least the late 2030s. In the example of Fat Home, the problem is they have high SG&A, so they're going all out trying to launch the drug, trying to ramp up sales. If they get to an annual run rate of sales around 400 million, I believe, is where they get a cash flow break even. One of the guys in our chat, he published recently, this morning actually, he said, I missed FRX in the early 2000s because I was bearish on the IP. They had only 5 year of the Waxman Hatch exclusivity on Celexa, which was off patent. The market didn't care about the IP once they got big EPS growth. They used their cash to acquire more products and eventually were sold for 14 billion. So I'm not saying Fat Home could do something like that, but what happens if they ramp up sales enough to where they are piling up cash and are able to use that cash to buy more products, clinical candidates for the pipeline and grow that way? Again, very possible. It could be a nice lottery ticket there. But again, for me personally, just because of my poor track record with companies with short-lived IP, I got burned pretty bad by AMRN back in the day. So again, that's why I prefer those composition of matter patents to late 2030s or 2040. And sometimes I miss out on companies that otherwise would have met our criteria very well because they didn't have that IP.
I mean, IP is important, especially if you get that 20-year runway that you can capitalize on it. So that's a valid point. I was going to give you a second to look through the chat because I know there's a lot of names that are being thrown at you. If there's anything else you want to talk about, but in the meantime, while you're looking at that, I just want to mention to everybody. I believe you still have your 14-day trial going on for ROTY Biotech. So even if you don't get your questions here answered here today, go check out Jonathan's service. I mean, you have the entire group, the community that you mentioned,
Mhm.
that is all sorts of doctors and really smart people that are way above my pay grade.
Way above mine as well.
Exactly, exactly. But
Well,
also,
that's the way I put it though. When I started out, I didn't have anybody to help me investing wise. So what I always tell people is try the 2 week free trial, copy my portfolio, answer the questions in chat. All my rules. We have a winners and losers page, so you can see all my worst losers, my winners as well. Why I lost, what I learned from it, and if it's worth it, stick it around for it. If it's worth it for you, stick around, and if not, copy everything that helps you and move on. That's kind of how what happened to me when I started out. I tried a bunch of different services. Some helped me more than others, so that's something everybody can relate to. I see a question on Axum, AXSOME. That for me was going to be the next CNS company to benefit after Intracellular ITCI was bought out. Unfortunately, I sold Axum way too soon, right when they had the Alzheimer disease agitation data come out, and they dropped down to the 80s, I believe. I sold it for a slight profit, and then from there, it went back up again. Last time I checked, it's been pulling back some because they had the solriamfetol, their second drug, failed in major depressive disorder. But otherwise, I like the company. I actually have that on my due diligence list, so I'm glad you mentioned that, David. Ideally, here at Lowe's or as it heads further south, it'd be nice for re-entry and holding. They have three of four of their trials for that indication, Alzheimer's disease agitation, are positive. You would think has a decently high probability of being approved by the FDA, assuming nothing's changed. So again, our rule of getting in while that valuation is around 1 times peak sales potential. If you have MDD for their volatility, their first drug, plus let's say around 2 billion of peak sales for that second indication, that compares pretty favorably to the current valuation. So definitely one I need to be revisiting as well.
very cool. I wanted to offer it up to you. Is there anything else you want to touch on right quick? I know we've been going for quite a while here. We covered our stocks that we were going to cover out, plus so much more. But I know
I'll do one last one just because I see there's so many of them guys there, and I'm
so
sorry I
many.
can't respond to everybody. And there's quite a few of those that I'm not well versed with. But like I said, the great thing is asking in chat. I see Replimune there, REPL. I believe they have a June PDUFA date for RP1 and PD1 failed melanoma. This is simple injection that would be very easily combined with PD1 for those patients who failed PD1 as a frontline. And what's interesting is we owned that one back in the day. We sold it for around 20% gain because I wasn't. Anytime management companies push back timelines, that can be a negative sign. So we got out before they had the failed pivotal trial in CSCC. But what's interesting again is trying to manage that regulatory mix risk. Myself in the past, what I would have done is enter the stock ahead of this PDUFA date. Now my plan in playbook. So in my phone, I have what is kind of like a playbook. Like in chess, you try to plan your next few moves ahead of time, and for me, that takes all the emotion out of it. So in playbook, what I have written for Replimune is I'm going to wait for the PDUFA date. I'm not allowed to enter before. If they get approved, I could buy a starter position, and then as launch metrics confirm that there is demand, I could round out, fill up the position, and hold it for a multi-year launch. And it's nice that their technology could be applied to other areas outside of melanoma. They have some low-hanging fruit in other skin cancers. But again, this is a way that I manage risk personally. I'm just trying to prioritize these commercial stage setups that are already approved first, and a few limited clinical stage where there's as many odds factors in our favor as possible. So I guess it's just a question of when you've gotten your hands burned on the stove so many times, you do everything possible to avoid that.
I mean, it's true. It goes back to what you were saying though, risk management. And if this is how you have to do it to manage your risk, more power to you, man. We all have our war stories here in these markets as well. But
100%, 100%.
I was gonna say, let's go ahead and wrap it up here. We've been going for quite a while. Everyone
Sure.
encourage you enough. ROTY Biotech, Jonathan, you've been more than gracious with your time preparing for this, and as well being here to present today. Can't thank you enough. It's an ever-changing market, as we all know right now, in this space, in particular with FDA approvals and clinical testing, and how is AI going to disrupt, and are they going to ban commercial? I mean, just crazy, crazy shakeups happening right now. So again, thank you. I want to give you a quick second before we jump off. Is there anything that you would like to share or say to everybody here?
Oh, no, not at all. Hope you'll give us a test spin. I also post some stuff on X, try to help people. You're more than welcome to private message me as well. Sometimes it can be intimidating in a larger group to put your question out there, even though we say there's no dumb questions. Obviously, when you're either starting out or you just don't feel like voicing in a group that you don't know particularly. We're a pretty tight knit group. Everybody, we've as you said, we've had some war stories together. There's been, in my case, since I started the service and started investing for that matter, there's probably been at least 4 times, where I was like in that stage, fetal position where you're about to throw in the towel. And then a veteran, somebody who's been in the market and the sector a lot longer than I was, would pick me up, dust me off, tell me how I could improve. So the only reason I'm still in the game is the people that helped me out there. So that's what we try to build in community, is everybody helping everybody.
Yeah, exactly. And I mean, seriously, if you have a question, 14-day free trial. Join, you ask the question, try to get your answer, and then you see how you go from there. But everyone, thank you so much for taking the time to hang out with us today. If you're watching the replay, thank you so much for watching it as well. And I'm Daniel Snyder. This is Jonathan. We'll see you in the next webinar.
Hey,
Take care.
thanks, Daniel. Thanks, everyone. Cheers.